Hello, this is Farouk Jaffer, certified financial planning professional and head of Index Guru's Wealth Management. The first quarter started with a great rally, but proved short-lived as inflation data, Fed hikes, and Silicon Valley Bank continue to haunt markets. Tech is making a comeback. Year-to-date gains for tech giants like Apple, Microsoft, and Alphabet are responsible for holding the market up. In a recent note, Goldman Sachs analysts estimated that without the six largest tech issues, the S&P 500 would have been down 2% for the year at the end of the quarter instead of up more than 3%. There are lots of positive data points. At a 3.4% unemployment rate in January, the labor market is the strongest in 50 years, which is continuing upward pressure on wages and prices. They indicated that more rate hikes will be needed to curb inflation, which will lead to continued volatility until inflation is under control. One recent data point offered better news for investors: cooler prices and spending. Still, inflation is running at a 4.9% annualized pace in the last 3 months, which is far too hot for the Fed's liking. The underlying fundamentals of a company are responsible for the lion's share of stock returns. As a result, Index Gurus advocates companies with solid balance sheets and positive free cash flow. Other important characteristics are companies that grow their dividends while harnessing the latest innovations and megatrends, which will be addressed later in this video. In the last major correction, Berkshire Hathaway CEO Warren Buffett told CNBC that he certainly won't be selling stocks during the decline in global stock prices, and that he would prefer it if Berkshire could buy at the resulting lower prices. Fed actions historically affect the economy with long and variable lags, so the economic consequences are yet to be fully felt, like the risk of a recession. That said, experts believe any recession could be relatively shallow in depth and duration. The key reason is that consumers account for nearly 70% of U.S. GDP, which remains in good shape without a heavy debt burden like in 2008. What if we enter a recession? It is possible that this may occur, but keep in mind that the average recession lasts 13.3 months, while the average expansion lasts 60.3 months. Based on the acceleration across goods and services inflation, we can see a huge improvement from the first half of this year. It looks like the Fed has had a positive impact on inflation. Big down days are tough, but staying invested is crucial. Since 1980, there have been 51 days during which the S&P 500 dropped more than 4% in a single session like it did recently, where 9 of those days happened during 2020. After each instance, the market never failed to recover and make new highs. Growth, driven by consumers and corporations, has held up admirably through the current headwinds. We believe long-term investors will be rewarded for enduring the volatility that will likely define markets over the remainder of the year. The next time market volatility feels scary enough to make you second-guess your long-term investment strategy, have a good think before you get out of the market. There could be a 70% chance you'll miss one of the best days. The chart below illustrates what has happened when an investor missed the 10 single best days in markets over the past 20 years. Megatrends are powerful, transformative forces that can change the trajectory of the global economy by shifting the priorities of societies, driving innovation, and redefining business models. They can have a meaningful impact on spending behavior, government policies, and corporate strategies. Identifying the potential for structural change and transformations early can be a key driver of successful investing. Technology breakthroughs like artificial intelligence, machine learning, and automation are unleashing a wave of disruptive threats across industries. Did you know that more than 75 billion internet-connected devices are expected by 2025? And that is up from 30 billion today. Climate change will cause us to have a greater dependency on clean energy like solar. Did you know that half of the world's energy is predicted to come from solar and wind by 2050? Certain commodities such as copper and lithium will likely see increased demand from the drive to net zero, and we are overweight the tech center and believe that it's well positioned for this green transition. Another major trend are longer lifespans and a larger demographic of retirees in their 60s. Did you know some estimates project a 45% increase worldwide in people aged 60 or older by 2030? With new technology comes the responsibility of privacy and cybersecurity. The Colonial Pipeline story is the perfect example. Did you know corporate spending on cybersecurity to counter online threats is rising quickly, up 12% from last year? Given our societal changes, it makes sense to tilt a diversified portfolio in various sectors. Why not just put it all in an IT or a QQQ? You'll notice that IT, the orange color, has held the top spots only in the past 4 years. Other top sectors include consumer discretionary, in red, and communication services, light blue. This will change over time, so holding top companies in various sectors is important. It is so important to practice diversification, even though it sometimes feels painful and comes with FOMO, fear of missing out. Morningstar did a study comparing two portfolios over the past 20 years, comparing a growth portfolio to a diversified portfolio with 40% in income securities. As you can see, you would have actually come out ahead with a diversified portfolio. Focus on your goals and not the news. Index Gurus is going to make sure you are well positioned in great companies that will weather the coronavirus pandemic. With proper positioning and guidance, the chances that you will be in the green, in the positive after 1 year are 75% in your favor. The US has shown that they are willing to keep the economy humming, so it makes sense to stay invested. Thank you in advance for your trust. You can count on Index Gurus to help you reach your goals with financial peace of mind.